Hi everyone, we are Group 7. Now we want to present about the company financial fraud issue. There are 6 members in Group 7 which are Xia Zihong, Li Weihao, Dan Weiqi, Dan Huiying, Lai Jiayan and Oi Junwei.
Hello, my name is Li Weihao and metric number 285509. And I would like to present about the company financial fraud. So the company financial fraud are typically suspected of illegal activities and unethical action carried by a company or an individual acting according to their authorities as an employee in the company. Financial fraud issues often exist as a complicated operation and usually takes several months with accountants to investigating the entire company financial situation. So the most impacted motivation to occur fraud schemes is the endless greed. So the endless greed that remains the primary driver of corporate fraud, and because the motivation behind this scheme is the desire needs to attract or retain investor. Thank you. Hello. Next is issue summary. The financial fraud comes in many forms. So before taking more precautions, people need to understand what constitutes business fraud. So the first is payroll fraud that is present when employee deceives the human resource department to receive pay that they should not receive. For example, employees may submit false data recording goals, sales, and production quantities to earn additional compensation. So the second one is financial statement fraud that involve the company modifying false data on sales, revenue, profits, assets, and expenses. So this fraud is committed with the intent of misleading the public and investor and also manipulating the stock market and enhancing a company reputation. So the third one is tax fraud. That is a common tactic used by company in which finance department submit false tax return to avoid the tax actually due. Such action allow company to pay less tax and take advantage of lower tax rate. So the last one is invoice tax. That is also a common tactic used by employee to create invoice to deceive the financial department of fund. This often includes submitting false invoice related to goods and services that the company never purchased or received, or setting up fake vendors to funnel fund into its own accounts and passing high price contact to no vendor or relative. Okay, thank you.
My name is Dan Huiying with metric number 287591. What does financial fraud mean? Financial fraud means when an individual or organizations use dishonor, false, illegal, or unlawful means to rob one's money, capitals, or harm his or her financial health. In this report, we will discuss the financial fraud that happened in Malaysia, which is the case of Jenawa Malaysia Sdn Berhad and One Malaysia Development Berhad NDB. And before proceeding further into discussions, I will briefly explain the details of these cases. So, Jenawa was a company that was known for the gold investment package, highly aggressive direct selling tactic, and promised a high investment return. However, in 2012, Jenawa company was uncovered for the irregularities, and in the end, the internal stakeholder were found guilty for the illegal deposit taking and money laundering charged under a few acts related with the financial fraud. On the other hand, 1NDB is a state-owned development company that was established in 2009 by the Malaysian government, and the former Prime Minister Najib Razak served as the chairman. In 2015, the bubble of lies of the company was pricked with fraud such as the embezzlement, bribery, money laundering, and misappropriations of funds. In the end, the ex-chairman was found guilty by the court and was sentenced to imprisonment and fined as the cause of committing financial fraud. What are the factors that cause them to commit financial fraud, although knowing the consequences? According to the fraud triangle, a person is motivated to commit fraud when the motivations, opportunity, and rationalism, these three elements comes together. Motivations refer to an individuals who have the financial pressure in their mindset, and this pressure will cause the people to become dissatisfied, greedy, and urge them to commit fraud to help them over the pressure. The second element, opportunities, refer to the circumstance that allow the fraud fraud to take place. Normally, the potential owners are inadequate supervisions, poor documentation process, and the weak internal controls. And these loopholes within the company will allow the employees to seek the opportunity and commit fraud as they believe no one will find out. Last element, rationalizations, describe a person's explanation for committing fraud. This normally happens when employees perceive that the executive are the one who are committing and supporting the fraud, and they will use it as a solid reason for them to commit fraud. Not only that, when an employee felt that they are being treated wrongly by the company and no one helps them to vindicate, they will execute fraud as a way of getting payback. Moreover, individuals committing fraud may think it is the only solution for them to dissolve the current difficulties. If not, they might lose everything.
Good day, my name is Jun Wei, metric number 288381. I'll be presenting about the ethical theories and concepts about company financial fraud issues. The first theory is utilitarianism. Utilitarianism is a moral theory that only focuses on the consequences of the actions. When the company amends the accounting scheme to show that the company has good financial prospects, they just wanted to attract and retain investors towards the company. However, they ignore the fact that it may cause financial losses for investors, job losses among employees, damage to reputation and the economy. Thus, according to utilitarian, financial fraud is unethical as it brings a lot of negative consequences in long term. Next, justice theory is applicable. Justice signifies the equitable, impartial, and unbiased treatment of individuals. There are a few types of justice. Firstly, it is legal justice. If people pursue legal justice, they will not conduct actions that violate the law. People who break the law have to face legal actions too. For example, Chief Financial Officer of Transmart Group Berhad Law was charged a compound of 700,000 ringgit Malaysia because he involved in falsifying the profit and losses of the company. Retributive justice shows that offenders should receive punishment that is proportional to the seriousness of the crime that they have committed. Gan, who is the former Chief Executive Officer of the company, is liable for a compound not less than 1 million ringgit Malaysia and up to 10 years imprisonment if he is found guilty in the company financial fraud. Thank you.
Next, virtue ethics. Applying virtue ethics to company financial fraud issues emphasize the importance of developing qualities such as honesty, integrity, justice, and responsibility in leaders. This ethical framework emphasizes the need for a culture that prioritizes fairness, accountability, and responsible behavior to prevent financial fraud. Malaysia YNDB scandal is the example of corporate financial fraud involving high-profile figures such as Najib Razak. The lack of this feature in the YNDB crisis resulted in several consequences, including financial losses and damage to Malaysia's reputation. Developing ethical character is critical to building trust, maintaining financial integrity, and safeguarding the well-being of organizations and society. In the context of corporate financial fraud, two key ethical theories, principal ethics and duties, come into play. Managing ethics is crucial for organizations to remain honest and open. Principal ethics emphasize adhering to ethical principles such as honesty and fairness. As seen in the YIDB crisis in Malaysia, where lack of transparency lead to misappropriation of funds, ethics of duty or deontological ethics emphasize the fulfillment of obligation regardless of the consequences, as illustrated by cases of financial statement manipulation in Malaysia, developed the obligation to provide accurate information and harm the interests of stakeholders. This real-life example highlights the importance of adhering to ethical standards in management to achieve trust and accountability.
My name is Tan Wiki and my metric number is 287370. I'll explain about the implication for stakeholders in 1MDB's financial fraud issues. Firstly, the 1MDB scandal's misuse of funds has a serious consequence for the taxpayers and citizens. The misappropriation of funds brings negative economic impact that increases job losses and raises the tax for citizens. Besides, 1MDB scandals carry serious implications for the investors. Both foreign and local investors become hesitant to enter the Malaysian market due to concerns about potential negative developments and uncertainties as investors' confidence declines. Furthermore, 1MDB scandal's misuse of funds brings serious harm to the financial institutions. The partners and clients will re-evaluate their relationship with these institutions, which could result in a substantial loss of trust. Next, the 1MDB scandal has an ongoing impact on the government. Financial limitations make it difficult for the government to plan, finance, and carry out initiatives that are crucial for the development of society and the economy due to the uncertainty regarding the completion of important projects. In addition, creditors could get involved in extended legal disputes as they try to protect their rights and reclaim the money given to 1MDB. Creditors are forced to reconsider their lending policies, closely examine applicants more carefully, and apply stricter terms and conditions.
My name is Lijayan, metric number 2x7617. Now I will present the potential solution to mitigate financial fraud within a company. Firstly, company can establish and implement a strong internal control system to ensure that financial transactions are accurate, authorized, and adhere to regulation. Moreover, the delegation of duty is essential to avoid any one person from having excessive control on a certain financial procedure. Besides, organization can carry out routine internal audit to identify and rectify control weaknesses in the financial transaction. Secondly, company can create a whistleblower program by developing a private reporting mechanism to let employees report questionable activity without fear of retaliation. Employees are encouraged to report any unethical activity in the company which promote an environment of transparency and honesty. In addition, investigators need to evaluate each case truly and impartially, demonstrating the organization's dedication to maintaining moral principles. The third solution is company can conduct regular internal and external audit to identify irregularity and weaknesses in financial processes. Internal audit team of an organization conduct routine internal audit to find inconsistencies and vulnerabilities, which cover a variety of topics including financial account, internal control, and operational procedure. While impartial evaluation of financial statement and regulatory compliance are provided by external audit, which are conducted by respected audit firms that are not affiliated with the company to maintain openness and credibility in financial reporting. Lastly, company can implement employee awareness and training programs to educate employees about fraud risk detection method and the consequences of fraudulent activities. Organizations can promote a culture of integrity and ethical conduct among their workforce and establish a robust defense against fraud by including this component into their employee training and awareness program.
Hello, this is our last part, is the conclusion. So in conclusion, our discussion is about the topic company financial fraud that happen from many cases in Malaysia companies. So from this discussion, we have learned that all illegal action and unethical action can be done by greedy mindset from an individual. This action can destroy a company and also the future of the road to success. So we conclude these two important ethical lessons can be learned, which is transparent and integrity and accountability. So the first lesson is company should transparent and integrity that refer maintaining clear and truthful financial information is critical for every company. Using financial data to mislead is unethical and can undermine trusting relationship with all parties. Any neglect of transparency can lead to erosion of trust with stakeholder and possible legal action. So the second lesson is company should accountability that executive and leader are ensured behave ethically and are responsible for ensuring the company financial activities are both open and complaint. Failure to fulfill this responsibility may have a long-term adverse consequence for the company and its related party. For example, when leaders take responsibility for their discussion and action, they are more likely to win the trust of shareholder, employees, and the other interested party. Okay, that's all from our team. Thank you.